As established manufacturers like Ford attempt to challenge Tesla's market dominance by implementing a vertically integrated system, the world of electric vehicles is undergoing a seismic transformation. Even though they lose money on each EV produced, firms like Tesla are able to decrease their dependency on suppliers and generate substantial profits from vehicle sales by producing EV components internally. In order to build two electric vehicles by 2026, Ford CEO Jim Farley has pledged to invest more than $50 billion over the course of the next 5 years. Is this the chance Tesla is waiting for to bring the old manufacturer to an end? Does the typical automaker have too little, too late? Come discuss the benefits and drawbacks of Ford's endeavor to counter Elon and Tesla's vertically integrated structure. Even the biggest advocate for legacy automakers would have severe questions about these automakers' destiny after learning about some startling facts about Elon and Tesla from Ford's CEO during the announcement of this new initiative. Prior to delving into this fascinating subject, please ensure that you have subscribed to our channel and hit the like button. Jim Farley, the CEO of Ford, is determined to challenge Tesla and become the world's leading electric vehicle manufacturer. The corporation has pledged to invest more than $50 billion over the next 5 years in order to accomplish this. But there's a catch. Ford is now losing money on each electric vehicle it produces. Farley has revealed a few startling facts about Tesla that should cause them to reconsider their plan. It's interesting to note that Henry Ford, the creator of Ford, had a distinct approach to production. He invented the idea of vertical integration, which entailed manufacturing every component inside and controlling the supply chain for raw materials. As a result, he was able to increase product quality while cutting expenditures. In 1930, Ford managed to sell the Model T for only $360, opening up the possibility of owning an automobile to millions of Americans. Tesla has surpassed Ford to take the lead in the market by using a similar strategy. The emergence of software-driven electric vehicles has forced big manufacturers to reconsider their business strategies. Tesla is able to generate a sizable profit from car sales and lessen their reliance on suppliers because of their vertically integrated business model. Automakers such as Ford are trying to emulate Tesla as the automotive industry shifts to more in-house manufacture. Previously, automakers would buy parts directly from vendors. Elon Musk, the CEO of Tesla, called this approach catalog engineering. Tesla has maintained an advantage over its rivals by designing and manufacturing a greater number of their vehicles internally. As more production is done in-house, like with Tesla's vertically integrated system, automakers are going to have to change the way they operate fundamentally. With this model, Tesla has had great success, but Ford and other automakers are now considering using it as well. Jim Farley, the CEO of Ford, is in charge of transforming Ford into an electric vehicle competitor, competing with Tesla. Ford is currently losing money on each electric vehicle produced, which is forcing them to reconsider their approach to competing with Tesla. Ford has pledged to invest more than $50 billion over the next 5 years, yet they are unaware that the labor required to produce EVs is 40% less. Regretfully, fewer workers will be required to construct EVs, but perhaps those workers will be able to pursue other career paths in technology, batteries, and related industries. Farley stressed the company's need to vertically integrate and abandon the catalog engineering paradigm at a conference earlier this year. He was alluding to Henry Ford's vertically integrated road production complex in Dearborn, Michigan, which was crucial to Ford's success. Other corporations that have undergone similar changes and implemented equivalent business strategies include Volkswagen, General Motors, and Mercedes-Benz. Nevertheless, they are compelled to purchase electric motors from vendors, and occasionally they encounter difficulties with software development. CEO of Lucid Motors Peter Rawlinson notes that in the competitive auto industry of today, Lucid and Tesla reap the benefits of a more vertically integrated approach. Major players, according to Rawlinson, have realized that electric vehicles are the way of the future, but they haven't yet universally realized that they need to up their game when it comes to electric powertrains, motors, transmissions, battery technology, and inverters. According to Rawlinson, an electric powertrain cannot be purchased at a world-class standard off the shelf. The market is still blind to the fact that this is a race in technology rather than a commodity. Rawlinson, a former vice president of vehicle engineering at Tesla, has mostly maintained internal control over Lucid's manufacturing, just like Tesla did. Now, all indications point to automakers perhaps giving up on contract manufacturing software and parts in order to cut costs related to mass production. They are shifting away from decades of contracting out research and development, as well as production to vendors that could provide semiconductors, electric components, and steering controls to several automakers at a lower cost and on a larger scale. Rather, they're spending their money on batteries, engines, and mining. It's evident in the electric vehicle industry that Tesla's vertically integrated business model works well. Tesla has won over customers by producing its own batteries, acquiring raw materials directly, and creating software. Tesla's approach was costly, even though many manufacturers lack the internal engineering capabilities to build their electric car frames, powertrains, and battery packs. In spite of its earlier pledge to release a model with a starting price of approximately $25,000, the corporation has raised car prices on a regular basis. Investors who think Tesla's vertically integrated vehicles will remain popular have not been discouraged by this. Other manufacturers, however, are hesitant to internalize every facet of EV manufacturing at a time when EV sales still make up a small share of the total demand for vehicles. IVS Market claims that the only companies that produce all of their electric motors internally are Chinese BYD Co., Limited, Tesla, and EV startup Lucid Group Incorporated. Several automakers, such as Ford, Porsche, and Mercedes-Benz, are utilizing electric motors from suppliers for their present electric vehicle models. Ford, however, is keen to emulate Tesla. The firm recently admitted that it needed to expand its manufacturing facilities and supply chains in order to meet its goal of producing 2 million electrified vehicles by the end of 2026. This will include the all-electric F1 pickup truck, and it will come at a cost of approximately $50 billion. While a sizable amount of Ford's work on internal combustion engines is now outsourced, the firm hopes to revert back to how it operated a century ago by bringing more EV production processes in-house. Ford wants to control the EV market and turn a profit from the selling of EVs. Jim Farley, the CEO of Ford, has stressed the importance of vertically integrating production and abandoning the cataloged engineering paradigm. Farley used Henry Ford's Rouge production complex in Dearborn, Michigan, which he constructed at the turn of the century, as an illustration of the goals the business had in mind. Farley claims that the business was forced to give up on its initial EV strategy of utilizing off-the-shelf parts. Returning control of the supply chain to the miners that produce battery components is what Ford wants. Ford and other automakers have their work cut out for them, even though competing in the EV market is a complex process that will require time, automation, and money. Automakers that haven't made the transition to electric vehicles by 2030 will go out of business. Ford wants to raise the bar to boost production in order to avoid falling short of Tesla. Ford should set even higher goals for itself. It will be a major accomplishment if the firm can produce over 2 million automobiles by 2026. Ford aspires to lead the automotive industry's transition to electric vehicles in the future. Not only is Tesla a fierce rival, but other automakers are also finding it difficult to meet the demand for electric cars. A small number of businesses, such as Tesla, the electric vehicle startup Lucid Group Incorporated, Chinese BYD Co., Limited, Hyundai Motor Company, and the Renault-Nissan Mitsubishi Alliance, are said to produce all of their electric motors in-house, according to IHS Markit. Several automakers, such as Ford, Porsche, and Mercedes-Benz, are utilizing electric motors from suppliers for their present electric vehicle models. If Ford hopes to compete with Tesla and other top EV producers, they have their work cut out for them. Ford wants to make its own electric motors again, but doing so is a more complicated process than outsourcing the production of combustion engines. Ford will need to take major steps to boost its production output and begin turning a profit from EV sales if it is to dominate the EV market. How do you feel about Ford's strategies to overtake Tesla? At this point, do you believe it is feasible? Tell us in the space provided for comments below. We would very appreciate it if you would consider leaving a like and subscribing so that you can stay up to date on the most recent EV, Ford, Toyota, and technology news. We appreciate your time, and we'll see you in the upcoming video.